And we're looking at digital payments company Latitude. Off the news today, it has lobbed a $335 million takeover bid for Humm's consumer business, including its buy now, pay later and credit card offerings. Now, Latitude's saying it will pay $35 million in cash, 150 million shares for the unit as it looks to accelerate its BNPL strategy. The proposal still subject to due diligence from both parties, as well as regulatory and shareholder approval. So, what do our experts think of the deal? Mark?
Look, the market seems to like it so far, and in a day where the Nasdaq was off 3%, and Latitude's not. If you have a look at the chart, it hasn't performed very well since it listed. So, to get that 2% is probably more like like a 5 to 6% really on a normal day. If it happened to announce it yesterday, for instance. So, look, the deal. There has to be some consolidation in this space overall. We're going to see rates sort of heading up, obviously, in the next year. So the credit card business and things might, as people deplete their savings that they've sort of accumulated over these lockdown periods, that the credit cards start to get used a little bit more. But look, it was one that obviously tried to list about 3 times. Latitude. I think a consolidation in the sector is a good idea overall. It's pretty saturated, particularly the buy now, pay later sort of space. So they're picking up 5 million customers, 70,000 odd merchants. So and they're expecting it to be double-digit EPS accretive pretty quickly. So within, say, around 2023. So look, overall it's a good move. The market seems to like it, and yeah, you probably just have to watch for a little while. It's been a really solid downtrend in this stock for pretty much since it listed. So I'd be more wait and see to see. I think it's a good thing that they're adding the Humm directors to the board, and then the Humm group CEO is going to run the buy now, pay later. So there shouldn't be too many hiccups there. But they're two relatively fresh companies. They're not, they haven't got a huge long history. So we'd be, there's possibly a little bit of inexperience there in terms of being used to combining 2 entities. So I definitely would probably just wait and see for the moment.
Okay, keep your powder dry at this point. Chris, does this deal make sense to you?
It probably makes sense, Andrew, but the whole thing is pretty underwhelming to me. Let's not forget that Humm is the old Flexi Group, and Flexi Group was sort of the ugly duckling of the buy now, pay later space. That's reflected in the chart. I completely echo what Mark was just talking about in terms of the Latitude chart. But if you look at the Humm chart from 2013 till now, it's gone from north of $4 to 90 cents. So you're having a business that is struggling in Latitude since it listed, buying or proposing to buy the potentially weakest in the buy now, pay later space. So it seems to me to be, 2 struggling businesses coming together. Can they make a fist of it? Well, I reckon that will be hard work. They're talking about synergies of $100 million for the full year 2023, and synergies, in the years thereafter. But this deal looks like a little bit too much hard work for me. I think ultimately investors can do better elsewhere.
All right. If you hold the stock, though, what are you doing with it?
Well, I think if you hold Latitude, again, like Mark, you're probably just waiting and seeing. You're waiting to see if they can make a good fist of it. But I would have a pretty tight risk measure in place to get out of it if it doesn't turn around.
All right. Okay. Sounds as though you're both pretty much underwhelmed by both those companies mentioned.